Hello everybody, welcome to this midweek live stream. I said during January I'd try doing them on Tuesday evenings and see what the turnout was like and whether people were interested. If you haven't attended one of these before, we'll take a look, we'll have a look at some of the major announcements coming up in the next few days, then jump onto this trading platform, onto this chart platform, and have a look at the major markets, indices, commodities, a couple of FX markets, the usual. Then if there's any stuff you want looking at, if you put it in the chat, we'll take a look at it. It feels a bit of a slow day today. I don't know if was it a holiday yesterday, I think, wasn't it, for Martin Luther King Day? And it just feels a bit of a lack of momentum today. But there are lots of markets in quite interesting places. So let's get the formalities out of the way, then we can get started. Let's just do a risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Okay, so let's have a look at what's left at the end of the week. It's a big day tomorrow, really. So I think first thing in the morning, I think it's 7 a.m, isn't it? We have the latest UK inflation data. I mean, clearly inflation is still a massive theme for markets. How far will interest rates have to go higher from here? You know, I think we're past peak inflation. That doesn't mean we're going to see prices collapse, but hopefully we're past the times where we're seeing inflation just getting knocked up higher month on month. But tomorrow we've got UK inflation out in the morning, and later on, I think in the morning as well, we've got EU inflation. So we could well have some volatility across all sort of markets on those tomorrow. And then on Friday, we've got the Chinese interest rate decision. I don't know how much impact the Chinese central bank has on global markets, but I suppose it's worth watching and worth being aware of when you start trading on Friday. That would have come in overnight. A quick word about my training course that I run. I've been running it for almost a couple of years now, about 19 months now. There are two parts to the course. Medium-term trading covers holding positions and looking at markets with a view to holding the trade for weeks, maybe months. 11 video lessons on that. There's the shorter term trading course that I put in November, all part of the same course, and that's holding positions for hours and days and looking at markets for that sort of time frame. 7 video lessons on there, and as part of the course there are 4 live webinars run by me every month. An update on the account. I've been trading this account as part of the training course, so it's a real account with real money, putting in the principles I talked about in the short-term course. So it's a £4,000 account. Every time I do these webinars, I like to talk about the progress so far. So these are the numbers. So closed profits in the last 30 days, £988, so that's 25% return. Somewhat unrealistic. I have had a good month. I had a good month in December, in between Christmas and New Year, and actually a good start to this year as well. 80% of trades ended up being winners. Again, I'd suggest that's a very good month. Don't expect that every month. So that's the 30-day number. The 90-day number, the percentage rightness, still pretty good, still higher than I'd expect. Just over 2/3 of trades ended up being winners, and over the 90 days from the 19th of October to the 16th of Jan, was that yesterday, £2,100 in booked profits. So that is more than 50% return on this £4,000 account, applying the principles that I go through on the course. So it's a real account, real money. I chose £4,000 because I thought it's a number that most of us can relate to, even if we don't have £4,000 to trade, even if we have more than £4,000 to trade. So again, past performance is not a guarantee of the future, but that's how it has performed since then, this real account. To find out more, go to my website, jonesthemarkets.com. The link, as usual, will be in the description to this video. I'm starting to do a newsletter, free newsletter, that I'll send out once a week for markets to look at and the odd trading tip. If you go to the website and scroll down, the sign up for the newsletter is at the bottom of the website. And as usual, any questions, send me an email, dj@davidjonestrading.com. Okay, let's have a look. So let's start off. We'll start off with stock market indices. So like I say, it feels like it's been a bit of a slow day, but I think it's interesting where these markets are. This is the NASDAQ. So this is the NASDAQ going back to the highs. The highs I've picked up are from the end of December 2021. So just over a year ago. We've had this downtrend in place. And we're still in this downtrend. And we are just now pushing back up to this downtrend. So for me, it makes it interesting up here. So if I'm going to go with the trend, I'm going to think about going short the NASDAQ. In the short term, I think it's still a bit too strong. But this whole, I don't know, what would we say, 11,750 to 12,200 area, if this rally is going to run out of steam anywhere, then I think this is the place. If you look on the hourly charts, we've still got a good trend going for the NASDAQ that's been going since the first week of January. So for me, I would not be looking to sell short today. But I do wonder, are we going to see it start to run in to a bit of trouble over the next couple of days? So that's our next week, couple of weeks, I should say. So for me, that's the zone to watch. Similar for the S&P 500. So the S&P did try and spike through its downtrend, and we are sort of bang on it again now. Today the S&P's traded as high as 4,012, but the trend is still down. Let's see what happens. So for me, this whole area going back to the highs from early December, around about 4,100. So 4,000 to 4,100. Do we see the S&P turn over again and continue this trend that's been in place for a year now? So I think we've got some interesting trading ahead of us, even though perhaps it's been a bit of a quiet week so far. I wonder, are we going to see these markets start to roll over up here and these downtrends continue? Of course, if we see 4-1 broken on the S&P, then it starts to look a bit like the DAX. When we had the DAX back here, the German index breaking out in October of last year, that broke out of its downtrend a few months ago. And we've seen this market continue to push higher. Just today, the DAX has hit the best levels since 18th of Feb. So almost 12-month high, 11-month high in the DAX today. So very interesting to see how these US markets perform when they get near these old big levels. Let's see what happens. So the FTSE has pushed right through these old resistance barriers. It's interesting, the FTSE. We're now trading not far off the all-time high. So the FTSE all-time high from about May 2018. Let me flip this over so I can zoom in on it properly. Make these monthly candles. So the FTSE all-time high, 7,900 or thereabouts, and it's 7,850 or so today. So interesting to see what happens with the FTSE up here. Still strong, and again, if we're going to see these US indices start to break out, then you'd expect to see the FTSE start moving to fresh all-time highs as well. Clearly, the FTSE was a big lagger on the bounce back from COVID. Of course, the market did bounce back. Here's the bounce back. But we didn't see the same sort of strength that we had in US indices. So I think we have a really interesting year, I think, for stock markets this year, particularly if these US markets can break out of their respective downtrends. Let's take a look at, let's do gold and silver. I did buy gold today. I'm in a trade on gold at the moment, so I did buy gold today. And I put a video out on the channel yesterday, I think, wasn't it? On gold, on the gold outlook for this year. So I don't think we're going to see fresh all-time highs for gold this year. But I do think it's from a trading point of view, it's absolutely a buy the dips market, gold. So if we take a look at that, look at that since the 2nd of November. So we are November, December, January. We're 2.5 months into this rally up in gold. I'd be worried that, I think I said in the video yesterday, perhaps now is not the greatest time to buy it from a daily chart point of view. because we are overstretched and overbought if you're looking at the RSI. But if we look at something on the hourly charts, and if we go back, we can go right back to the beginning of the trend back in November in gold. But if we pick up on perhaps the last month or so, the last 3 weeks or so, it's going to look something like this, if I can draw it properly. There we go. So even if we saw gold drop by about $30 from where it is now, it still looks to be a buying opportunity. So I think it's an interesting market. I bought it this morning. I bought it at about 19.11, 19.10 this morning. So it's pushed a little bit higher. It's pushed a little bit lower. Interesting to see for the rest of the session. Does it hold above the lows from earlier on in the day? Let's see. Let's see what happens. But for me in the trade, I'm looking to see if it can push back up to at least where it was yesterday. The highs from yesterday, 19.30. So on the hourly chart, the trend is still up. On the daily chart, it would perhaps be a bit ambitious to expect a lot from it over the next week. Let's see. Let's see what happens. But that recovery in gold is still going off those November lows. If we take a look at silver, it's just a bit choppy, silver, isn't it? So silver currently trading just below $24, pretty much where it was a month ago. Like gold, we've got the big run up in silver. It's still going off the daily charts, off the mid-October lows. Still looks to me like a buying opportunity if it gets knocked back to 22 and a half. There's still a lot of support for silver. It's just been not the most exciting market over the last few weeks or so. But interesting if it gets knocked back to those mid 22 and a half. So the recovery still going for silver, just a little bit dull. Let's take a look at oil and natural gas. So the oil chart, it's been its good move in oil. Let's take a look on the hourlies first of all. So if you have a look at oil, still, I mean, again, a really, really good trend since the 5th of January in the oil price. Let's just tidy some of this stuff up. Let's take some of this off. And again, in oil today, we've seen the market move a couple of dollars today. So if we pick up on the trend, so at the time of looking at it here, absolutely for me, that trend on oil is still up. So for me, I'll still be a buyer of dips on oil. And I think the short-term support I'd be watching out for, the lows going back to perhaps Friday, around $78.50. So the trend in the shorter term time frame for oil, definitely up. Where it gets interesting now, if you flip it over to the dailies, so there's that trend in yellow, but we are now not a million miles away from what has been something of a problem for the oil price going back to the beginning of December. And that comes in just above $83 a barrel for oil. So I think it's an interesting market to watch for the rest of this week, given that it's currently a couple of dollars or so below this place where it has ran out of steam a couple of times over the last 6 weeks. Are we going to see the price of oil run out of steam again? So for me, the trade I am looking for on oil later this week is going to be a short to see if there is any weakness. I mean, if it goes blasting through that level, I won't be going short. But if I picked up on the trend off the highs, I suppose it looks something like that. So we are seeing it having a little poke through the trend, but for me, I'll be keeping an eye on 83 and a bit a barrel. I'm wondering if we're going to see the sellers come back in for oil. Let's see what happens. But for me, I'll be leaning towards selling short as the week goes on, assuming we get some weakness. Natural gas, actually, it's actually been quite quiet for a week now, natural gas, after this massive sell-off from just below 7 down to about 3.5. So it halving in the space of about 3 weeks. We are seeing it a bit calmer. It is interesting down here, natural gas. I've had this big level in place for a while, and it goes back to July 2021. So it's 18-month lows on the gas price down here, around about $3.50. So if you absolutely thought that the sell-off in natural gas had gone too far, and it was time for a bounce, this looks like a pretty good area for a bounce to start from. So I think it's an interesting one to watch. If I was trading it now, I'd probably still want to be a little bit patient, because if we take a look on the hourlies, it was only a couple of days ago on Friday we saw it briefly push through this low again. But you can see it is trying to build some sort of support down here. So I might want to be a bit more patient. But if I had to do a trade at the moment, I'd probably be a buyer. I would be a buyer. And I'd put a stop loss somewhere the other side of $3.40. So I think it's interesting, albeit it's been a little bit quiet by natural gas standards over the last week and a half. But for me, 340 to 350 is really the big area to watch. Let's take a look at some of the currencies. So the dollar index, I am currently short the dollar index from the end of last week when we had the sell-off on the inflation numbers. But, so that's a short-term trade, I'm short. But looking at the bigger picture, I do wonder, this is the daily chart, I do wonder if we're going to get a bounce anytime soon. You know, again, we're back to what has been a big level, the dollar index. This is the trend going back to May 2021. So again, more than 18 months that trend's been running for. We're back to what was an important low on the way up. The low from whenever that was, May last year, down at 101, 101.30. And here we are, we're about 100 points above that level. You know, are we going to see a bounce from here? Again, a bit like natural gas. If the market's going to bounce from anywhere, then I think this is the place to watch. It did make a new low for the down move yesterday. So again, for me, I'm happy to stay short from a short-term trade point of view, and from a medium-term trade point of view, thinking about being a buyer, I want to see it stop going down. And it is only yesterday that we saw a new low in that sell-off for the dollar index. So another sort of sit on my hands market at the moment from a medium-term point of view, but the big support coming in around about 101.30. Let's see what happens. If we take a look at the euro, I mean, the euro recovery continues. You know, we've been watching this for a while and saying that the market has turned around and back up. You know, we've broken out the downtrend, broke the big resistance that was in around 102, and just this week, it looks like yesterday, hit its best levels since April last year. So again, for me, it's a buy the dip market. You know, I'd like to have a half decent sell-off and be a buyer of the dip in euro against the dollar. You know, even if it comes back down to 102, that trend is still up. So 600 points below where we are now, that trend is still up. So we'll see. Let's take a look at pound against the dollar. Same story there, really. Okay, it has fallen out of the trend. It'd be interesting to see what happens over the next couple of days for pound against the dollar. I suppose if you thought that the pound recovery was overdone and it was time for a bit of pound weakness, you do have an interesting trade coming up, because if it runs out of steam ahead of these December highs, they're coming in around 124.50, then it looks like an interesting short selling opportunity up here. If it does run out of steam up here, if it blasts through 124.50, it looks like the next leg higher is starting. And for me, the target on that would be about 127, the highs from May of last year. So an interesting one. I'd probably be leaning towards being a seller if it starts to weaken ahead of 124.40 pound against the dollar. But let's see how that works out in that market. And a quick look at the world of crypto. Oh, I got Bitcoin. Let's have a look. Let's have a look at Bitcoin futures. I did see it got a bit of a move on, didn't it? There we go. Is it coming back to life? The crazy world of crypto. There's a great quote that there's nothing like price to change sentiment. And you know, with the run in Bitcoin since the beginning of the year, let's see, where did it end last year? So it ended last year about 16,500, and here we are now 21,500. So it's moved $5,000 this year. So it's a 30% move in Bitcoin so far this year. I would be tempted to sell the first bit of weakness. So if we have a day where we see a bit of a sell-off, I'd be tempted to be a seller. It did gap higher, so that was Friday's close. Oh, because this is the futures, so this isn't showing the weekend trading. Fair enough. That's why there's that gap in there. This is the official listed futures. I did wonder. Let's see what happens. There could be, you know, because the sentiment that drives the market is the same as any other market. So there could be, some people who have, if they see it start to push back up to where it was, maybe September last year, just ahead of 23, and start to falter, will they think, well, quick, I'll get out on the bounce. So for me, it's an interesting move. Not too exciting just yet. It was always going to break out that downtrend because it had stopped going anywhere and the market was going sideways. So let's see what happens up in this 21 to 23 zone. But I'd be quite tempted to be a seller into strength on Bitcoin up here. So we'll have a look. We'll have a look and see what happens. So that's it, really. So interesting markets to watch. Watch interesting. There's quite a few that I think are worth keeping an eye on, but nothing doing for me yet. So US stock markets, because they are coming back to the big downtrends, are they going to break? DAX, the German market, left that downtrend behind a long time ago and is absolutely a buy the dips market. Gold, like I say, I'm long gold at the moment. We do have a good uptrend going on in gold. A deeper sell-off is maybe the better trade there. If it did dip back below 1900, looks like an interesting trade. Perhaps for me, the most interesting market to watch this week is oil, because it's had a great run since the 5th of Jan. When was that? A couple of weeks ago. It's had a good run. It's risen about $8, $9 in the last couple of weeks, but we are back into what has been actually, if we flip it on the hourlies, we can see it as well, can't we? This big barrier for the price of oil going back to December. Whenever we've seen it push up here, ultimately it's finished the trend off, and here we are again, up, getting near that old resistance. So I think that's an interesting market for me, and I'd be looking to see if we can sell short. Have you ever traded the France 40? Let's have a look at that. I must admit, I never have done. I'm guessing it's going to look a bit like the. Is it going to look a bit like the DAX? Maybe. I don't know. Yeah, it's similar to the DAX, isn't it? I suppose the old French. If we put a thing on it, put a trend thing on it, trend line. Again, breaks out, sells off, and here we are up here. So similar sort of moves to the DAX. I must admit, it's not a market I ever look at, the French index, the CAC 40. But again, if it's a market that suits your trading, well worth looking at. Me, I'd still look at the DAX. Be the market I'd watch. Similar sort of moves between the two of them. But I think for me, oil is perhaps the more interesting market to watch as the week goes on. So a quick reminder, to find out more about my training course, go to the website, jonesthemarkets.com. If you want to send me an email, any questions, dj@davidjonestrading.com. And there's that newsletter thing that I'm going to start sending out, I think in the next week. If you go to the bottom of the website, you can sign up for it there. But let's take a look at some of the markets that you want looking at. Let's see. Hang on a second. Let me just scroll down. Can we look at STLA from the New York Stock Exchange? STLA. It's like an anagram of Tesla. Oh, Stellantis. Isn't that the company that owns... Oh, there's a car company, isn't it? Hang on a second. Stellantis. Yeah. Do they own Fiat? Yeah, Fiat and all that lot. And blah, 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 blah. Okay. Let's have a look. So Stellantis. I wonder if the is the European listing going to be better than that? STLA. Is it Milan? Yeah, maybe. Same looking chart. Hang on a second. So what would you say about Stellantis? I would say I would be a buyer. That's what I would say. So we did have, if we go back in time, let's just get rid of this thing for now. We did have the trend off the COVID lows, and that came to an end. Then the thing was in a downtrend from Jan of last year, and I would say that's come to an end. That is over and done with, and we're trying to build this new trend since last summer. So for me, I'd be a buyer. The only question is, as usual, would you buy it now, or would you wait to see if there was a pullback down towards 13 euros, that sort of zone? I must admit, I'd be tempted to wait, have a bit of patience, and see if we do get a bit more weakness from here. But for me, the thing has been recovering since July last year, and the trend is new trend is up for me. So I'll be expecting to be a buyer on dips if we got a half decent dip from here. Can we have a look at Hex Crypto? Oh, what's this? Sounds very dodgy. Maybe it isn't, but Hex Crypto, is it a hex coin or something? I mean, I don't even know. It sounds a bit. Does it look like that? Does that look? As you may have gathered, I'm not exactly the biggest fan of some of the more obscure cryptocurrencies. It may not be obscure, but I can't really bring it up. Hang on, is it that one? Okay, so it's gone from like 0.52. So what's that? 50 cents down to 2.7 cents. I mean, if we did see something of a recovery in Bitcoin, it would drag the rest. You would think it would drag the rest of the crypto world up with it. So some of these slightly less mainstream coins would get dragged along with it. But for me, I would still be betting the trend was still down, so I would go short. Although, of course, that's theoretical because I wouldn't touch anything like this with a barge pole personally. But you may have a different view. But for me, it still looks a bit like the trend is still down, and no doubt has been dragged a bit higher. I would have thought by some of the excitement we've seen in Bitcoin. What's Ethereum done? Has that been dragged a bit higher as well? Yeah, the whole crypto space has had a bit of a bounce back. So I think Hex has benefited from that. But I wouldn't in the same way that I don't believe the bounce in Bitcoin just yet. I'm a little bit skeptical about the bounce in all the other stuff as well. Let's see what happens. But as I think I said last time around, perhaps when crypto is a weird market, it's full of the most naive traders out there, and most retail traders are naive anyway, which is why most people lose money. But in crypto, you've got absolutely, as a rule of thumb, the most naive of the naive, and they all pile in when the price starts moving. So when the price has been quiet, like it has been for a while now, perhaps we have seen an important low in crypto. When it's not moving, there's not much interest in it, and there's not many Google searches in it, and all that sort of stuff. And now it started moving in. Let's see. We'll keep coming back to it anyway. I think if we do see Bitcoin and cryptos get a move on, and if we do think they're going to have this sort of exponential nonsense again, there'll be plenty of time to get in on the move. But for me, a week and a half of strength doesn't yet cancel out a year plus downtrend. SC, we'll come back to it. And see what happens. Can we take a look at Sainsbury's? Yes. So Sainsbury's, UK stock, LSE listed. There we go. I think I've mentioned I used to have Sainsbury's in the old days, and I should have sold them up here on the spike up, and I didn't get out at 340. I think I ended up getting out about 310. So it was still a good thing, and I was riding this trend up, and I haven't looked at them since, but I think I should look at them since. Let's take a look. Let's take a look at them. So for me, that downtrend in Sainsbury's that has been in place since, well, I'd say at least October 2021, that has ended. So for me, I'd be a buyer of a dip in Sainsbury's. The only problem is, would you buy them now? Or would you wait? Is what I would say on Sainsbury's. What would you do? If I was a buyer now, the closest I'd want my stop would be the other side of 210, probably. So I'll be a buyer at 244 with a stop more than 35p away. So I'd rather see if we get a bit of a dip, bit of a sell-off. The risk is, of course, you might miss a bigger move. So for me, I'd absolutely be looking for buying opportunities. I want to be a little bit patient and see what happens. Let's see though. I keep coming back to it. Interesting looking stock. That one. IAG. has continued to take off since we looked last Tuesday. Lovely, terrible pun there. Well done. IAG, which is the company that owns British Airways now, amongst others. It has, isn't it? And I said I didn't believe it, didn't I? I said I'd go short, I think, because I'm guessing. See, I can own up to my mistakes. So we had downtrend, 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 bang. I wouldn't have believed that. And I would have get ready to go short. I might even have gone short there, actually, on that red day. Red candle there. But anyway, it's blasted through. I still go short again. Ever the contrarian. I would go short. I go short now, 157. And I wouldn't because it's not open now. And put a stop at 170. So I'm still not convinced the downtrend is over, even though it's blasted through this downtrend line. So I would have one more go at going short, and if it breaks 170, I would throw the towel in and say that's it, I'm wrong. So I think it's a heck of a move, isn't it? It's off that low in when was it, October? It didn't quite double, but it almost doubled into that spike. Interesting. But yeah, I mean, for me, I always think the first move through a trend, either up or down, is the wrong move, is a false move. But let's see what happens. Platinum. I've been wrong-footed by this a bit. I haven't got a trade on it. I did have a trade on it. What would you do? There are arguments for both here. So taking what I just said about breaks of downtrend, breaks of trend lines, not believing them initially, then you could take the view that's a false break. Okay, so if you wanted to go short platinum, go short at 10.39. Oh, it's really moving about a bit. 10.39 with a stop above 1100, that most recent high. That is one absolutely a valid trade. I mean, it would have been better to have done it a couple of days ago, but whatever. You know, we can't go back and trade historical days. Or you could take the view, actually, platinum's in a recovery and going to be a buyer of the dip. So for me, for now, I'd be a seller. What will be interesting will be to see how far does this correction go. We'll bring in the old squiggle here. Do we get that sort of thing? And then bang, that. So that would be what I would be looking at. But for me, at the moment, I would be looking to go short and not believing the break. But an interesting market after some really scrappy nonsense in platinum. I think it's interesting. Again, up here. But for me, I'd be leaning towards the short side for now. But let's see what happens when it gets knocked back from here. Where do the buyers come back in? Race is the best car company. Ferrari in it. It's a great thingy they got for themselves, isn't it? Code. Oh, they're breaking out as well, Ferrari. I think because all the supply chains are all getting full fit. It's too late for me to even think of words, because the supply chains are getting a bit unblocked, aren't they? I think for all these car companies now. I think VW said that they were expecting growth in China. I think just this week. What do their shares look like? Oh, they still look a bit rubbish. Okay. Diageo, DGE, the drinks company. Oh, it's a bit boring to me. What do you think? I think this is another one I've had in the past, but for me, that looks just dull to me. I mean, we've got, the 12-month range, lows at £33, highs at 41. So we've got an £8 range, and we're pretty much in the middle, aren't we? We're in the middle of the range. So for me, it's like nothing. I suppose you could take the view from a short-term point of view. You could say, oh, well, we had been in a bit of a downtrend since the beginning of December, and it's sort of broken that downtrend out, which is fair enough. But medium term, it's been a bit dull for the best part of a year, hasn't it? It'd still be a buyer rather than a seller. It'd still absolutely make the case the trend is still up. It's just not been the most exciting stock over the last 12 months, but at least it hasn't gone down. Dollar SEK, Swedish. Is it the Swedish I never know if it's the Swedish krona or the Swedish krone, whatever it is. Swedish krona, there we go, dollar sec. I would be a buyer. So again, even though there's a lot of broken trend lines tonight, so even though the trend has been up, and it's broken, I give it another chance. I take the view, it's a false break, I'm going to be a buyer. So if I was a buyer now, I would put my stop loss underneath the low in December, whatever that is, 10. Underneath 10.14 is the low. So for me, yeah, I'd give it a chance to try and get a move on and recover, push back into at least the middle of that recent range, those highs from October. So if I was going to trade it now, then my target would probably be 11-ish, 10.8 to 11. But let's see. Adidas. Where's that? It's probably too many listings, isn't it? Adidas. It must be. Is it not German listed, isn't it? That must be the one, mustn't it? Oh, it's still going up. It's maybe breaking out of its downtrend. I've been wrong on this one in the past, haven't I? I remember when they had that surge on their new CEO, and I thought it was going to run out of steam. It did run out of steam eventually, but it hasn't gone back to the old lows. So it looks like perhaps finally Adidas is breaking the trend. But again, for me, as this is only the first move through the trend, I wouldn't personally be sucked in to be a buyer just yet. I'd wait for the first down day and go short. But it is interesting, because it is breaking that downtrend. It was a heck of a downtrend. It went from 330 euros in August of 2021 down below 100 by November. God, that was a lot, wasn't it? 15 months, and it lost 200 plus euros, 70% lower, 60-70% lower. So for me, it's an interesting one. Early days though, so I wouldn't be doing anything just yet. Let's see. Now it's broken this downtrend, can it actually get a move on? I would still be leaning towards being a seller. Hello, David. What are some important trading related certificates, and do you have any? I would say the profitable trader trading certificate is a really important one, and I've got that, as you can see from the beginning of this presentation. But I would say, in all seriousness, I did when I was in the 1990s. I did the Society of Technical Analysts certification. So I did that, and now I lecture one of the modules for that. And I think I think if you wanted to work professionally in financial markets, that is something that can help. It's a recognised professional qualification. It helped me get a job as a technical analyst. My first job as a technical analyst way back in the 1990s. I think with trading though, if you're trading for yourself, if that's what we're talking about, trading for yourself, I think you just need to get on and do it. Clearly you need to attend a brilliant trading course like mine, but you just need to get on and do it. And I don't think any amount of academic qualification necessarily prepares you for the world of trading. Let's not forget, most people lose, don't they? If you look at the brokers, they've recently all upped the percentages of people who lose, and it's typically 77 to 85% now of people lose money trading. So there's clearly more to it than just a professional qualification. But if you wanted to work in financial markets, there are loads of professional qualifications out there. A second. What do you think about order flow trading? Is it rubbish? Order flow trading is not something I look at. I've never looked at things like level 2 or direct market access. I'd never say any trading approach is rubbish. I think there are thousands of different trading strategies, but most people still lose. So it's all about finding a strategy that works for you. But there absolutely isn't a silver bullet either. So if someone says, because these things come in and out of fashion the same way, 20 years ago, direct market access was the big thing. And if you didn't have level 2, how could you even trade? Which I think is utter cobblers. So don't believe that anything's a silver bullet. But again, it's whether it's the right approach for you. I would never look at order flow trading because I've got absolutely no interest in it. And I'm quite happy trading my approach. So I wouldn't say it was rubbish, but also don't think it's a silver bullet. Dollar yen. Let's have a look at dollar yen. I'm guessing it's going to look, a bit like, obviously, like the dollar index chart. It's an interesting move in dollar yen. It went. Let's go back to the beginning of last year. Well, actually, no, it's 2 years ago, isn't it? Of course it is. It was down at 102, touched 152. For me, that trend is still down in dollar yen. So for me, if I was gonna, the first thing I always do is plonk a trend line on. What's the trend line look like? The trend line looks like that. So for me, I'd still be a seller of strength in dollar yen. If it ran back up to where it was just about a week and a half ago, up around 133, 134, it looks like a good selling opportunity. So for me, that would be the trade. I'd have no interest in trying to buy the bottom, trying to pick a bottom. I'd be keeping an eye on this area down here, though. That was clearly important on the way up. Those are the lows from May of last year, so around 126. But for me, I'd still be a seller of strength in dollar yen at the moment. So let's have a look. Oh, thoughts on prop firms. The one I looked at required 8% in 30 days, 5% daily drawdown limit. I have never ever been involved with the prop firm, so I've got no idea. I've read about them. I've never traded with them. I think it's quite tough, isn't it? Because your drawdowns are so limited that even though, let's say that you have 100 grand to trade with, if your drawdown is limited to, I don't know, 5%, 3%, whatever, it's difficult to use all of your trading firepower in a sensible risk management approach. But like I say, I don't know anything about it. So do your own research on that one. What else have we got? Entry on Nvidia today. Nvidia. So Nvidia is the what is it? The graphics processor stuff, isn't it? I'm sure I saw something that their stuff isn't selling because there was all this thing, wasn't there? Going back again a couple of years, that there was the supply chain shortage of chips. It's also affected, of course, the car industry because they can't get the chips and everything else. But I did see that I think they'd released a load of stuff, Nvidia, and it was still stuck on the set shelves in the US. Anyway, I think it's interesting because we had this downtrend on Nvidia from November last year to the lows in October. So again, the bet here is, do you think the downtrend is over? That's the bet. If you don't think the downtrend is over, I think there's a great area to go short. We've got the highs up here at 188 from December. The market's currently 176. So if I thought, actually, this downtrend is not over, I'd go short on a bit of weakness and put a stop loss somewhere above 190, for example. Yeah. But if I thought, actually, no, the weakness in Nvidia is over, I'd be a buyer now. The only question is, where's my stop going to go? I'd probably wait for a bit more of a sell-off, see if we get a sell-off, and be a buyer of the dip. We got good old support down at 140 from December. So it's an interesting one. A lot of these markets do look like potentially they are changing direction or sucking us in to a change in direction only to carry on the previous trend. So it is interesting at the moment, but it's also having to be patient and waiting to see how these things play out. Let's see. So for me, I'd still be a seller with a stop above 190. If it breaks 190, it looks like we've got another trend reversal coming up. So let's see what happens. Right, that's it, I think, isn't it? We're all done. If that's all the questions, I think we're done. So stuff to watch. For me, oil, like I say, I think oil is the interesting market. Looking to see, does it once again run out of steam up at these 82, 83 and a bit levels, so 81.5 to 83. Let's see what happens there. Stock markets, Nasdaq and the S&P, still in the downtrends. They've had a good week or so, week and a half. Do we see these markets start to get nervous. So as usual, I'll do. And I saw. What did I miss? That GOTU. I missed GOTU. Sorry, I did miss that. What is that one? Is it that one? Gautu Tekadu. Okay, great. For me, I mean, that is a nuts stock. It's quite a good one to end on because it is so nuts. I've got no idea what this company does. Miscellaneous commercial services. Right, so it was $150 in January, last 2 years ago, of course, and it's $3 today. I mean, I often say this. I hate stocks like this. You know, the thing has gone from 60 cents in November to $4.20 in December. I mean, it's a flip a coin, isn't it? It's a casino in it. It's a casino stock, isn't it? For me, I'd go short. There you go. I'd go short. GOTU with a stop above $4.20. I wonder, is it a bit of a Wall Street bet stock? It certainly has the characteristics of a Wall Street bet stock, doesn't it? So let's see. It's a good one. That's a good one to end on, though. But for me, I'll come back on Friday. I'll do the normal Friday lunchtime stuff. Interesting to see if oil runs out of steam. Interesting to see what happens with these US indices. Do they start to break out these downtrends? Let's see. Let's see what happens. So a couple of interesting markets to watch as the week goes on. As usual, to find out more about me and the approach and the profitability, all of that, go to the website, jonesthemarkets.com. Any questions, drop me an email, dj@davidjonestrading.com. If you could like the video for the YouTube algorithm. If you're not subscribed, click on subscribe. I think that's it, isn't it? So it feels, like I say, feels like a bit of a slow week so far this week. But let's see how things look on Friday. So as usual, we'll do the Friday live stream from 2:30. So until then, have a good week and good luck with your trading.